Hi guys, welcome to this video. In this video I'll be showing you how to trade the most valued order block. There's so many order blocks in the market and you really want to reduce the amount of order blocks you take. You can't trade every order block technically, so the only way I've been able to take some of the most valued order blocks is by either looking for order blocks that have been formed due to a flip zone, meaning a failed supply or demand that's left an order block and needs to be retested, or making sure that order block has a sweep. So I look out for these things, and that's what makes me very confident when I'm about to take a trade off any other block. If I don't find any of these two, that other block is not valid to me, because there are so many other blocks in the market. Every break of structure basically leaves another block, and there are so many breakup structures. You can't trade every other block. You need to have strict criteria or strict rules behind which other block is valid and which other block is invalid. So let's jump right into the chart where I show you how I trade the most valid order block. So right here I have an image of my flip zone, what flip zones look like for people that don't understand flip zones, and what a proper sweep should look like. So this is just a sketch of what it looks like. We're still going to jump right into the chart and show what it looks like using the candlesticks, but this is what flip zones look like. So this first instance here is my supply to demand flip, meaning the market was, there was an order block here that was tapped into, gave a reaction, then the reaction broke the highs and basically violated this order block. So you always expect a retest back to the other block that was created here, because there was a break of market structure here. Let me just draw it out real quick. Yeah, so there was a break of market structure here which left this other block here, and this is the inverse of it. This is the demand to supply flip zones. So in this example here now, we have a break of market structure that has an order block which was filled in, gave a reaction to this high here, but this reaction couldn't break this main high. It couldn't break the main high, then turned around to break the low. So this means we had a reaction from this order block here that reacted, gave us some reaction, failed to break a high, then broke a low, and this is a new break of market structure. So this already creates another block here that the market comes back and tap into. So these are like ways where I validate my order block. I'm still going to show this properly on the chart, but this is just a sketch of how I validate order blocks. And now we have the sweep ones. In order for you to know your order block is very valid, there needs to be a sweep of a previous high or a previous low. When you have something like this, you know this order block is more valid than like all the other blocks that you have, because there's so many other blocks on the chart. I don't want to be like every smart money trader, because you just get ruined taking every other block. So let's check this out on the chart. And sometimes, a lot of times actually, I get two of this in a setup. I basically see a flip zone and a sweep, which gives me double confirmation. A lot of times you get the two of them in one setup. So let's just jump right into the chart and let me show you an example of this. So in this example here now, we have a break of market structure. We have a break of market structure here. We have a break of market structure here that basically leaves an order block. It leaves this order block here. It leaves this order block here. This order block gave a reaction, and the reaction could not take out this eye right here. It could not take out this main eye right here before it failed. And when you have something like this, you just know this order block is more valid than the rest of them, because there are so many other blocks here, which let me just mark them out real quick. There are so many other blocks here. There are so many break of market structures. So many break of market structures. So how do you know which one will price likely come back into before continuing the sales? How are you going to know which one price is going to come back into before continuing the sales? So this is why I use my flip and my sweep to validate order blocks. So in this setup here, we have the two, we have the sweep and we have the flip zone. So in this setup, we have this reaction that was violated, that was broken. We have this reaction that eventually broke a major low. Eventually broke a major low right here. So this makes this order block very valid for me. And we also have a sweep here. So this order block is very valid for me. And in my own entry model, I have so many criteria that I look out for before I take a trade. Let me just put that right here real quick. So I have all of these entry requirements for me to take a trade. But in this video, I'm basically explaining how to validate order blocks. But regardless, I would never take a trade without following my criteria. So I might as well just put the criteria up here. So I have this flip zone. I have this flip zone that validates this order block for me. That validates my order block. I could mark this candle out as my order block, or in order for me to refine the candle better, I'm just going to draw it out from my sweep. Draw it out from my sweep zone. And this is a very valid order block for me, because it's not just a random order block. This right here is a random order block, because here we have a break of market structure. We have a break of market structure here. We have a break of market structure at different points in this market. But what makes order block valid for me is when it is coming from somewhere, or it has a sweep, meaning it cleared an eye, and this was the eye that was cleared here. Because if you do your market structure, your higher highs, higher lows, you have this lower high here that gave this lower low, the market came back, price came back to sweep this lower high before continuing down. So this is a very valid sweep. And what makes order block valid for me, if we check, and I'm looking for my sketch. Sorry, it's right here. So what makes a flip zone valid for me? A flip zone is like every other trade that you take. For you to know a valid flip zone, because a flip zone, I already said a flip zone is a field demand or supply, and for you to say there's a clear reaction from a demand or supply, it means before the demand or supply was tapped into, we have liquidity. So there must be liquidity. There must be liquidity in every flip zone you take. It has to be a valid order block, supply or demand, that gave a reaction and failed. So it must have liquidity, which I've also drawn here. So let's look for the liquidity on the chart here. So we can see here that price actually gave liquidity here. There was actual liquidity here that made this order block here valid. We have a break of market structure, we have liquidity, and we have market coming back into the order block to give a reaction, but the reaction was not strong enough to take out our eye, and the reaction failed. So that was what makes it a valid order block. So price should eventually come back here and sell from there, but I have other entry criteria, because I don't just look at my flip zones, sweep, and order block and just take a trade from there. I like to see other confirmations. It needs to happen in a Q zone, either London or New York, and it needs to be in discount. So we know that we have a swing structure here. We have a swing structure here. From year to year is a full swing, and we only trade the premium or discount zone of swing structures. You don't want to be trading off random points. You want to make sure you are either selling from a premium or buying from a discount. That's the smart way to trade. So I throw my Fibonacci 2 and make sure my order block is in a discount or premium zone, but this is a sell scenario, so I make sure that my order block is in a premium zone. And if all my trade criteria is met, and I know that this trade is happening in New York session, I just put my sell limit and just watch my trade get tapped into. So let's see how this trade is going to get tapped into. So the market now is around 9 p.m. It's around 9 p.m. So I never trade outside session. So this kind of trade, if I spotted it the day before, I just know I want to see what's going to happen the next day, London session. So let's see. Let's play price forward and see what happens. And see what happens in the London session of this particular setup. So now we see Asian forming, and the price is just supposed to just come above Asian, sweep Asian session, tap into the other block and sell from there. So boom, this is exactly how I trade, and this is exactly what I look out for day in, day out. Nothing fancy, nothing special. Target the 1 to 3 for first take profit. Most times I just do 1 to 3s, except trades that I just want to hold longer. But most times I do my 1 to 3 and I'm out of the market. Take a nice 1 to 3 and out of the market. But you need to make sure every trade criteria is met. You always need to make sure every trade criteria is met. I'm about to wrap up this video. I'm just going to throw in quick bonus, but I'm not going to be cutting or replaying the market. I'm just going to mark out what I can see. So here we have the same entry basically happened there. So we have a break of market structure. We have a break of market structure. Yeah. We have a break of market structure up here as well. So this here now, yeah, so we have a break of market structure. Sorry, I got confused there. So we have a break of market structure here. We have a break of market structure here, right? That has an order block. And this that I drew here is just a sweep. I got confused for a minute there. So this is a sweep. This is the break of market structure. We have an order block here, right? That has inducement. Important thing you need to always look out for. It must have an inducement for you to know that yes, this is another block that was tapped into and gave a reaction. So it has an inducement. This is the inducement right here. This is the inducement right here. Then we have a reaction from the other block, which is this reaction right here. This is the reaction right here. We had a quick sell off, but this reaction never came down to break a major low. It just gave us a reaction and it broke a high. And it broke this high here. So when you have something like this, you have a flip because you have a supply that was tapped into, gave a reaction, then broke structure to the upside without clearing a major low. So that is what you always want to look out for a valid flip. Then this reaction now becomes the other block. It basically becomes the other block. And here also we also have a sweep. So drawing your market structure, higher highs, higher lows, higher highs, higher lows. We have this higher low that formed this higher high that was broken. So this structure shows that this is a sweep of this higher low, because they already formed a new higher high. Market just needed to correct a little bit without even breaking something. Probably correct just like this, higher high, higher low, then continuation. But no, this low was taken out, and that is a sweep of this higher low. So we have a sweep right here, and drawing our order block from our sweep. we have this order block. I decided to use this full candle order block here. But before that also, I still validate my trade. Do we have a sweep? Do we have a 50% fib retracement, which is basically indicating premium and discount zone? Do we have liquidity? Do we have flip zones? And is it happening in a London and New York Q zone? So basically, I throw my Fibonacci 2 from the last protected low to the swing high to get the 50% or get the premium and discount zone. But in this scenario, we are buying, so this is a discount zone, and trade was tapped into around 3:30 New York session. So this is a value trade to take. Traders inducement, traders every criteria that I need. I have my flip zone, I have my protected low here, which was validated with the flip zone and the sweep. I have inducement, and price came back right into the session that I trade. So basically, this is how I trade every time, looking for these same confirmations, making sure my order block is valid, because there's so many other blocks on the chart. And the mistake you don't want to make is thinking every other block is valid, because it actually isn't. Some other blocks are just right there to take your money. You need to know the right other blocks to take in order to take more quality setups. So I hope you've learned something from this, and you know how to really trade good order blocks now and take more valid setups. So thanks for watching. I'll be coming back and coming out with more videos. Thank you.